Welcome back. Here's your latest housing market forecast through 2024, according to Fannie Mae. They just announced this a few days ago because they believe that existing home sales will fall to a 15-year low this year and remain at very low levels next year as well. So they have that to share, but also I'll provide their predictions for interest rates, home sales, and of course, home prices as well in today's video. So of course, I have a lot to share in today's video. I don't want to waste your time. Let's begin. So this was just announced on September 18th, which by the way, they believe a mild recession still remains due to inflation and also the labor market cooling off as well. So this report, by the way, is according to Fannie Mae's Economic and Strategic Research Group, or their ESR group. So in regards to the housing market, it says the housing market faces renewed headwinds with mortgage rates settling above 7%. So rates have been above 7% on a daily basis going back to late July. So nearly 2 months in which rates are above 7%. So rates very much have remained elevated for quite some time now. And I'll also give you an update regarding rates today as well, which is Friday. Still, the downside risk to total home sales, which of course is brand new home construction plus existing home sales, is limited as more sales are being driven by life events rather than discretionary factors. So what we're saying here is that the number of home sales we're seeing right now is really due to sales that we always see, due to death, divorce, people moving, getting a new job, etc. We're not seeing a lot of people who are trading in their 3% mortgages and taking on a 7% rate. That is kind of few and far between right now. They also mentioned the share of cash purchases still remains very high as well. According to the National Association of Realtors, I believe for August, that share was around 25 to around 28% on national level. Fannie Mae also says that new home sales were surprisingly strong in the first half of the year, partly due to home builder rate buy downs, in which they're buying down rates for home buyers, which become more expensive though when mortgage rates increase. This is what I've been talking about on the channel, right? Because we see this dichotomy in our housing market in which existing home sales are just falling off a cliff, whereas new home construction sales are absolutely surging, increasing by more than double digits percentage-wise compared to 1 year ago, whereas existing home sales are falling by double digits. So new home construction sales up and existing home sales down. And that's due to the fact that we have limited supply of existing houses, but also a lot of builders are still offering incentives for home buyers, such as rate buy downs. But because rates have been at around 7.3%, 7.5% for quite some time now, how long can home builders still offer these 6%, 5.5% rates? Time will tell, and I'll definitely keep posted, of course. So going forward, this group here expects new home sales to pull back slightly due to the higher mortgage rate environment and the recent decline in home builder confidence. So home builder confidence decreased in the month of September, the first time it decreased this year. I should say it's the first time that home builders have been pessimistic regarding building single-family houses going back to April 2023. I should clarify that. So regarding rates as of Friday, which is, you guys are probably watching this video over the weekend, but average rates as of Friday, of course, rates do not change over the weekend, is at 7.39% according to the Mortgage News Daily. Jumbo loan is at 7.42%. FHA is at 6.82% and VA is around 6.85%. But at 7.39%, this is very close to a 2-decade high regarding average rates. Average rates 1 year ago were at 6.62%. That's an increase of 0.77 percentage points compared to 12 months ago. But wait, check a look at this because this is absolutely crazy. According to Investopedia.com, as of today, September 22nd, the average 30-year fix, again, for people with great credit buying a primary residence, and they have a FICO score over 740, and also putting at least 20% down, is a whopping 7.92%. How insane is that? All right, getting back to Fannie Mae's real estate market predictions, according to Doug Duncan, who's Fannie Mae's chief economist, he stated the following. According to our latest national housing survey, households remain confident in their employment, even though they don't feel great about our economy. And the vast majority do not believe it's a good time to buy a house, as mortgage rates and home prices continue to constrain affordability. This is evidenced by recession-level home sale volumes resulting from very low levels of existing houses for sale and the significant affordability challenges, which I talk about all the time on the channel. So in regards to their national housing survey, which is this right here, their home purchase sentiment index, this is for the month of August, just announced, I believe it was a few days ago. So take a look at this, because only 18% believe it's a good time to buy a house based on the survey, and 82% believe it's a bad time to buy a house right now. In contrast, 66% believe it's a good time to sell, whereas 34% believe it's a bad time to sell a house in the US right now. Fannie Mae also shared the following here. So total home sales, which of course is existing home sales plus brand new home construction sales, has remained at levels not seen since the year of 2011. The new home market, which showed a strength in the first half of 2023 due to limited existing houses for sale, quote, may now be taking a breather. So they believe that new home sales will likely decrease in the months ahead, or won't be as strong in the months ahead, probably because of high rates that buyers are facing right now. And of course, home builders cannot continue offering 5.5% rates when rates today are around 7.4%. They also say the following here: with the 30-year fixed rate staying above 7% in recent weeks, purchase mortgage applications based on the MBA has pulled back again, now sitting at its lowest level since approximately 1995, which I share with you guys each and every week. So the number of people submitting loan applications to buy houses is on par with the lowest levels since approximately 1995. And also the prospects of a recovery in existing home sales in the near future is unlikely given the strong mortgage rate lock-in effect and stress housing affordability. Of course, a lot of people do not want to give up their low rates, right? Here's a really good chart showing applications for home loans to buy houses going back to the year of 1990. This is actually from the MBA here, or the Mortgage Bankers Association. So the current levels right now are on par with the lowest levels going back to 1995. Absolutely insane. And because of that, that should imply that close home sales will decrease in the months ahead as well. Fannie Mae also provides some really interesting information regarding average rates that buyers are getting for existing houses versus brand new home construction, and if home builders will still be able to offer these very low rates that they have been offering for about a year or so now. It says the recent rise in rates will also test the resiliency in the new home sale market. A big question will be to what extent home builders will continue to offer generous mortgage rate buy downs in order to increase sales. Looking at the recent Fannie Mae mortgage acquisition data, there has been a wide divergence in the average note rate, or the average interest rates that borrowers are using to buy brand new houses versus existing houses. I just paraphrased that. So here's a really good chart showing just that. Here is the interest rates that home buyers are using for existing houses versus new houses. So the rate that buyers are getting was virtually the same in 2020 as well as 2021. But when rates started increasing greatly in 2022, we saw the rate that buyers are using in order to buy new houses to be at a lower rate compared to existing houses. This is because home builders were offering, low rates compared to what you could get to buy an older house. What I found to be interesting, though, is that in the last half of, or I should say in the fall and winter months of 2022, the difference in rates was pretty great. So back in like November 2022, approximately, the average rate for buyers buying a new house or a brand new home construction was around 6%, whereas existing homeowners were paying about 7%. Or I should say buyers buying existing houses were paying around 7%. So a difference of about 1 percentage points, right? Right now, we still have a higher rate for existing houses compared to new houses, but the difference is not as great. Right now, it's around 6% for a new house and also around 6.5% for buyers buying existing houses. All right, let's change gears slightly here and talk about their forecast overall regarding housing starts, home sales, home prices, and rates. Let's first talk about housing starts. What I'm more focused on regarding this is single family, in which, by the way, this is seasonally adjusted and also annualized. And these numbers right here are in thousands of units. So for example, for single family housing starts for 2022, there was just over 1 million. Their forecast this year is 914,000, and then it decreased once again to 910,000 in 2024. And that equates to a 9.1% decrease compared to 2022 and 2023, and also falling by 0.5% in 2024 compared to 2023. In regards to home sales, some pretty big changes here because they believe that new home sales or sales of new home construction for single family will increase by 6.3% this year, but then only increasing by 0.6% in 2024. Now, here's where it gets really interesting here. So existing home sales, this is single family, condos, as well as co-ops, down 17.4% this year, then to increase slightly by 0.8% in 2024. So they're calling for 4,156,000 existing home sales this year, and then at nearly 4.2 million in 2024. So what they don't mention is how this compares to years past, which is not that. I want to share this with you guys. So here's a download I pulled from the National Association of Realtors website here. So again, their forecast this year is at 4,156,000 according to Fannie Mae this year. So by my analysis, this is pretty crazy. That would be a 15-year low, the lowest levels in existing home sales going back to the year of 2008. So this is more or less a housing market crash regarding new home sales or sales of existing houses. So at 4.156 million, the lowest levels going back to the year of 2008, when at that time there was 4,110,000. That also would equate to a 17.4% decrease compared to last year, and also compared to pre-COVID levels, down by 22.2%. Then in 2024, the forecast again was at 4,191,000, on par with the lowest levels going back to the year of 2010. That'd be a decrease of 16.7% compared to what we saw back in 2022, and also down by 21.5% from 2019. So how wild is that? They're forecasting this year to be at a 15-year low regarding home sales in the US. And this, by the way, is after last year, we saw a decrease of 17.8%. But then on top of that, falling by 17.4% this year. At least that's what they're forecasting. And also, in my personal opinion, I've been saying this for quite some time, my forecast is around 4.1 million existing home sales this year. So we'll see who's right here. But this will likely change given the direction in rates, of course, right? Let me also share their forecast for home prices based on their HPI or their home price index. So for the third quarter this year, they're calling for home prices to increase by 3.5% compared to the third quarter of 2022. And then to increase again in Q4, but then to start falling in 2024. So by the time we hit Q3 of 2024, their real estate market predictions is a decrease of 0.1% compared to the third quarter this year. And overall, this year up by 3.9%, and then a decrease by 0.7% compared to 2023. which, by the way, even though they decreased their forecast for home sales of existing houses compared to the previous forecast that was published 1 month ago, their forecast for home prices is more or less the same compared to last month's forecast. Let's also talk about the projections for rates as well. So they're forecasting that rates are going to be above or at or above 7% in Q3 and Q4 this year. But after that, they're forecasting for rates to decrease each and every quarter. So by the time we hit 2024, we're going to be at 6.5%. And this year, they're calling for the average rate for the entire year this year to be at 6.7%. Something I found to be interesting, though, is that their forecast from 1 month ago was a little bit lower. Let me just share that with you right now. So 1 month ago, their forecast was the rate or the average rate this year to be at 6.6%, and then next year to be at 6.3%. But their new forecast now is at 6.7 and 6.5%, a small increase compared to the previous forecast published 1 month ago. Lastly, they also looked at the total number of single-family mortgage originations. So for the share of refinances back in Q1 of 2022, half came from people doing refis, and of course, the other half were people using loans to buy houses. So virtually the same levels of refis versus people buying houses. Now that changed drastically once we hit Q4 of 2022 when rates increased to what, 6.7% on average. So the share went from 50% in Q1 doing refis to going only to 17% in Q4. And overall, this year, they're saying the share is only going to be 16%, but to increase to 24% by the time we hit 2024. So please leave me a comment below with your biggest takeaways from today's video. Mine is this right here. They're basically forecasting that rates are going to be in the range of 6.5 to 6.7% this year going into 2023, which will really impact home sales this year as well as next year as well. I mean, 2023, a 15-year low regarding home sales. That's absolutely insane. Anyways, that's my biggest takeaway, but what's yours? Thank you so much for watching today's video. Also, check out that link below if you guys want a real estate agent referral, or go to realestateteamfinder.com. Hope you guys have an awesome day. I look forward to seeing you on the next video.